This is the video I wish I watched before started trading crypto on leverage. I will try to cover absolutely everything that I believe is important for beginners and also some tips and tricks from my experience that pretty much nobody told me when I was starting at. This is going to be quite a long video, so if you want to look into all the things that we're going to discuss, here's a screenshot of these and let's get right into it. First of all, I want to start with the prerequisite. If you're watching this video and you don't know anything about technical analysis, risk management, you don't have experience trading cryptocurrencies on spot, and you're not ready to be losing around 60% of the time while you're trading on leverage, this video is not for you. Also, if you're looking for some quick gains and how you will be able to 100x your portfolio in a matter of days, just click away and start doing these first steps that we already discussed. Technical analysis and trading on spot are definitely the places where you need to start, and leverage is something that comes at a later stage when you get a little bit more confidence and experience on the market, and that will actually also protect you from doing stupid things and from liquidating your account several times. So if you have already liquidated your account, welcome. We're going to show you how you can avoid this in the future. And if you haven't, come back when you're ready for this course. I also want to start with a couple of quotes. The first one is my favorite when it comes to beginners, and that is, if you're lucky and you have several wins in a row in the beginning, that is pretty much the worst thing that can happen to you, because you get cocky, you start increasing your sizes without knowing what the hell you're doing, and then you liquidate your account at least several times before you start getting into the mood of real trading and not just gambling your money away. And the second quote that I want to show you is copied actually from Warren Buffett, and if we kind of paraphrase it for crypto leverage trading, it will be something like this. Rule number 1 is not to get liquidated, and rule number 2 is to forget about making money in the beginning and look at rule number 1. As you have seen from the title, this video/course is designed for beginners. Leverage trading has a lot of nuances and a lot of complex mechanics, but I will try to simplify everything for you so that you have a better beginning when you start trading with leverage. And if you want to go much deeper into leverage trading, with time and with experience, a lot of questions will start popping up and you'll be able to find the answers on your own in the future. Okay, so what exactly is leverage? This is pretty much money that you borrow from the exchange to increase your purchasing power in your trading account. And if we look into a specific example, I'm going to walk you through the interface and how you open shorts and longs and so on. But just to understand what exactly is leverage, here I have a demo account and it has around 270 USDT. And if I want to apply leverage, I can go long or I can go short. So this means I'm selling on the market, and I can use different number of leverage here. You can see up to 125x on this specific exchange. But let's say for the example, I use 10x leverage. This means that my purchasing power in this account of $270 will be 10x, and I will be able to open a position on the amount of $2,700. Now you might say to yourself, oh great, I have 100x leverage. I will just put $100 into my account, and this means that I will have like $10,000, and if I just do a quick double, I'll have a lot more money than what I started with. That's kind of true, and it's technically possible. However, the risks with higher leverage are also much higher, and something that not many talk about, but also the fees are increasing with the higher amount of leverage. And this is mainly because you're borrowing more money to increase your purchasing power. This is pretty much like going to the bank and asking for a loan. If you're borrowing more money, you will be paying more at the end of the period that you're borrowing. So keep this in mind. And also something very important, I cannot emphasize this enough, the higher the leverage, the lower your liquidation price. So let's take the example of 100x leverage. If I use this means that if price here moves 1% against me. Let's say I open a short position here on Bitcoin and the price moves against me. This means the price goes up in the case of a short. And if it moves just 1% against me on 100x leverage, this means that I will lose all my collateral. So if I put $100 with 1% move against me, I will lose all the $100 that I have in my account, and I will be liquidated, and then I will have to pay even additional fees for liquidation, which we're going to discuss a little bit later. So higher leverage introduces a lot more risk in any kind of situation. And for beginners, I wouldn't recommend anything more than 2 to 5x on any given trade, just so you get used to with everything that you have to understand and manage when trading with leverage. And when you get confident, it's fine to go a little bit higher, maybe even to 10x. However, if you're not day trading and if you're not scalping every single tick on the market, I would definitely recommend not going any higher than 10x, because the risks there are a lot more serious and you need a lot more experience and very solid trading systems in order to be profitable in the long term and avoid liquidations. Also, one key question to ask yourself is, why do you need to trade with leverage? Because pretty much if you have, let's say, $1,000 to invest and you want to buy Bitcoin, and you have $100 with 10x leverage, this is exactly the same position. However, the fees and the risks are a lot lower if you just buy $1,000 on the spot market. So trading with leverage might not be your thing. We'll discuss specific use cases for leverage trading, but just think about it and consider spot trading instead of using leverage. And this actually brings me to the next point. The same rules of risk management and trade management apply whenever you're leverage trading or spot trading. Don't get carried away that your P&L shows 50% in profit on a 10x leverage position, because usually platforms like this one, Bitget, is showing you the P&L based on your collaterals. So if you are 50% in profit on a 10x position with $100 that you initially invested, this means that you're pretty much $50 in profit, and it's not like you suddenly became rich. So don't get carried away. Focus on your risk management, focus on your systems, and with time you will see that your P&L will be improving while you're following these rules. If you focus on the P&L only, this is pretty much a recipe for disaster, and many people lose money like this. And it really doesn't matter if you have $1,000 account or $10 million account. Trade like you have a huge account, whatever a huge account is for you. Follow these rules and you'll see that in the long term you will reach your trading goals. A couple of more things that I wanted to discuss in this section is who actually uses higher amount of leverage and who uses lower amounts of leverage, and also what are the different types of leverage that you can use. And here you can see that you have a tick which says isolated or cross. There are short explanations on pretty much every exchange on most of those options that you have to choose, but very simply put, cross is whenever you're using your entire account collateral as a guarantee for your trade, and this means that your liquidation will be using the entire amount. No matter if you open a position, let's say on BTC with $100, but you have $10,000 in your account, if you get to a liquidation price, it will use all the amounts in each of the accounts that you have. However, if you use isolated, this means that you will be using and you'll be liquidated only on the position that you have. So in the previous example, you'll be risking only the $100 that you invest on the single trade. So definitely I recommend starting using isolated in the beginning compared to cross. This lowers your risk and also pushes you to be a little bit more strict when it comes to risk management. Also keep in mind that by default, all short positions, even if it's just 1x leverage, are leveraged positions because you're shorting the market. You don't have, let's say, one Bitcoin and you just sell it on spot, which is also kind of shorting, but on spot. The difference here is that you don't have this position, or you don't have to sell your Bitcoin, but you can use collateral. In this case, it could be USDT or Bitcoin or whatever, and you're betting against the market. So you're saying that price will be moving down and you're able to benefit on this even on 1x leverage. But all the rules apply. You still have a liquidation price, you still have to pay fees, and so on and so on. And finally, who uses high leverage and who uses low amounts of leverage? First of all, this is a 1 hour chart on Bitcoin on this platform. And if we go down to the 15-minute chart or even to, let's say, a 1-minute chart, you'll see that you still have opportunities here. You still could take a breakout or a short position for a breakdown. There are plenty of opportunities on every single time frame. However, the lower the time frame, the lower your profit targets are. So let's take this as an example. If you decide to take this breakout, and this is not the greatest example, but just keep with me, and you take a long position on Bitcoin, your first profit target would be somewhere around here at this local top around 17.2k, and this is just 0.3% from your entry. And if you want to make real money, and if you're a scalper and day trader and that's what you do every single day, you take pretty much tens of trades every single day, you need high amounts of leverage. Yes, same rules apply, again, risk management and everything that we are discussing. However, in order for you to make good money on 0.3% gains, you need to use at least 10, 20, even 50 to 100x leverage. Again, this poses a lot of risks, but if you put stop losses in place that again are at a smaller percentage rate, this won't change pretty much the dynamics of your entire portfolio, because as I said, it doesn't make a real difference if you're trading with $10,000 position on leverage or on spot. It's still a $10,000 position and you can manage it in different ways. Even if you're considering day trading, and this is just an advice for the beginners out there, don't start with day trading and going down the really low high time frames. What I like to do in my leverage trading is use it on the 1 hour, on 1 day charts, and also hold the positions for quite a bit longer. So if you're like me and you're more like a swing trader instead of a day trader, you will be using a lot less leverage. I would say up to 10x. This will give you a lot more flexibility to put stop losses and to leave prices move before they get to your target. If you're a busy guy and if you have, let's say, a day work, or if you have a family or other things, you won't be able to be on the computer 24/7 and track the price and try to take advantage of every single tick of price. So definitely I would suggest for beginners to start with swing trading on leverage. And then if you think that this is your thing and you want to day trade, just go for it. But remember that the risks there are quite a lot higher. And also on the 1 minute chart, things move drastically in a very short period of time. If you go to the restroom or whatever, this might have completely changed, and that's why you need to be here. And usually there's a simple rule that applies. The higher the amount of leverage that you use, the shorter hold on a position that you have, and the lower amount of leverage, you can allow yourself to hold it for longer. This is because of fees and also because of the price fluctuations. I hope I clarified a lot of things about leverage, and in the next section let's discuss something important, which is your liquidation price. If you have a good risk management and trading system, liquidation is something that should never ever happen to you. But of course, you still need to understand it, and you still need to understand how you can avoid it. Let's just open a position here real quick and show you what exactly is your liquidation and discuss and practice what is a liquidation. So I want to use 10x leverage on Bitcoin, and I'm gonna go long in this case. And you can see below my entry here on this position, and right here at the bottom you can see your liquidation price, and in this case of this trade it's 15.5k on the Bitcoin price. In simple terms, this means that if price gets to this level, the platform will automatically close your position. Depending if this is an isolated or cross margin position, it will liquidate the position in order to meet your obligations towards the exchange. And what this more specifically means, that if you have a collateral of $100 and price gets to this level, this means that on a 10x leverage, your position is around 10% down and you have only $100 in your account. So they will need to use this $100 and close, because if price goes any lower, you won't be able to pay up your obligations. And if we check how exactly this looks on the chart, you can see the red line here is our entry on this position, and percentage wise 15.5k is around 10% down from my entry. So on a 10x leverage, this is pretty much my liquidation price. One very important thing that you need to be aware of is that if you get liquidated, you don't only pay the collateral that you have, but you also have fees for liquidation. So these are extra fees, and usually it's not exactly 10% down from your position. It's a little bit higher just because the exchange wants to make sure that they will be collecting also their liquidations fees on top of everything else. In some cases and in some exchanges, you're able to trade pairs like, for example, Bitcoin, Ethereum, and in this case you will have to use as collateral one of your coins. So let's say Bitcoin and you're shorting Ethereum versus Bitcoin. If the trade goes against you, you will have to also take into consideration the move of the price of your collateral. So not only the price of Ethereum, but also the price of Bitcoin. And this kind of makes your liquidation price flexible, because it might be very close to your entry if suddenly there's a big spike or a big drop in the price of your collateral, and the exchange will again protect itself when it moves your liquidation price much higher to your entry, just because the price of the collateral has already changed. This is also how loans that are taken for whatever other purposes from platforms like Nexo and Celsius once upon a time, this is exactly also how they work and how their liquidation systems are in place. If you borrow USDT against Bitcoin as collateral, and if the Bitcoin price starts dropping massively, you will either have to be paying more with your dollars in order not to be liquidated, or you will be liquidated at a much higher price compared to what was originally your plan. So make sure that, especially if you're a beginner, stay away from trading on leverage different crypto pairs except for stable coins or straight out dollars or fiat. This will make your life a lot easier, and with time, if you get the confidence, sure, you can try and trade the pairs also. The easiest way to avoid liquidation at any given point in your trading career is to simply lose a stop loss. We're going to discuss this a lot more in detail in the future sections, but keep in mind that every self-respecting trader has the stop loss as his best friend. And now let's move to the next section, and let me tell you what are some of the best used cases for trading on leverage. Most beginners start trading with leverage because they have this wrong idea that somehow leverage will help them get much faster to their goals, and they will be a lot richer in a lot shorter period of time. That's usually not the case, and just the statistics confirm this. More than 90% of the traders lose money, and that's mostly people that use high amounts of leverage. So before even thinking about using leverage, you have to forget about this nonsense of get rich quick scheme. It's not that, and they're actually very useful applications of using leverage, and we're going to discuss some of them in this section. First of all, before you open up a position, make sure you understand the tax implications in the given position. If you want to hold Bitcoin for the long term and you want to open a position of, let's say, 2x or 3x to increase your rate of gains in the future, keep in mind that first of all, you'll be paying taxes on the money you borrow, and you have to calculate if the gains that you will be making will be significantly more than the taxes that you will be paying on the exchanges. And also another scenario is if you want to make a quick flip on an exchange and you're seeing that you have a 50% profit on a given position, make sure that you also look into your tax implications of your country, because some countries like the United States have short-term gains and long-term gains. And short-term trading means you will be paying a lot more taxes. And if you're not great at short-term trading, again, this might not be the thing for you. So what are one of the best used cases for leverage trading? I'm gonna tell you the first one that I personally like using, and this is for a quick swing. Let's say you see a potential for price to get to a certain level and you really like this setup, you believe that the risk to reward on it is great, and you want to take it. I personally like doing this, although I'm a swing trader and I trade mostly spot and I hold coins for the longer term. But if I see a setup, I'm going to use leverage if it's just a quick flip for me. And another very important reason that I would be doing this, especially nowadays, is because in general this allows you to hold less funds on a given exchange. I might have an account of $100,000, but if I keep just $10,000 on the exchange, which is just 10%, I'm still going to be able to trade with the $100,000 in mind. And especially after what happened with FTX and in general with all the risks that centralized exchanges have, I think using leverage could be a very good option to kind of protect the downside of your entire portfolio. And definitely if you're using leverage, you should have at least a few exchanges. Like for example, in this case, I'm using Bitget, I'm using KuCoin, I'm also using Binance, and I have many other different exchanges also for spot trading. So you need to diversify your risk even within your leverage trading accounts. And the last application, which is probably my favorite application of leverage trading, is to hedge my existing positions. So let's look at a specific example of Bitcoin. I have a bag of Bitcoin in cold storage, and usually it will take me quite a lot of time to go get the hardware wallet, transfer funds to a centralized exchange, sell my Bitcoin if I believe price will go down, and then move my money to a bank and then do this all over again whenever I want to buy more Bitcoin. I can avoid doing all of this and still take advantage of the move to the downside with leverage. And very specifically, this breakdown here around 18K, I took a short position as a hedge against my existing Bitcoin that I have, and this way I was able to profit around 10 to 15% and to make money to the downside and limit my losses for my long-term holds by shorting the breakdown of 18K and buying back some Bitcoin here in the lower range around 15-16K. This tool I think is very powerful, especially if you're a long-term holder and you know what you are doing. You don't have to do this all the time obviously, but when there's a screaming setup and you want to protect your funds, I think definitely hedging is one of the most powerful applications for leverage trading. Let's get down to business. While the first section was a little bit more theoretical, now we're gonna get into the practical side, and because we're gonna need the entire screen, I have removed my ugly face. I'm pretty sure you've had enough of it. I'm gonna show you first of all how to set up your accounts for leverage trading and also which exchanges I'm using, how to execute orders, and all those little details that you need to be aware of when you're starting. First of all, make sure you have at least a couple of accounts for leverage trading, and maybe even more. It really depends on your preference, but I personally prefer to have at least 2, and currently I have probably around 5 accounts where it allows me to trade with leverage. This doesn't mean that you are going to be using all of them, but it's for risk diversification. Also, some tokens are not available on some exchanges, and also some exchanges have glitches, like in this case KuCoin. I remember when I was in a Bitcoin short and the volatility started increasing, I couldn't access my short position. There was no data on the chart and I couldn't do anything pretty much with the position for a period of a couple of hours. And this is terrible news, especially if you're trading with high leverage. So just keep this in mind and make sure you diversify your risk between different exchanges. Which exchanges? First, you can go to CoinMarketCap and then you can click here on exchanges and then derivatives, and you'll see which exchanges have the highest volume. So the first one is Binance. You can also compare the fees here, by the way, maker and taker. I would definitely recommend having a Binance account and a KuCoin account because they pretty much cover most of the pairs that you will ever need to trade. And then I know from experience that Bybit has a very good interface, and as you can see, quite a lot of volume too. And then Bitget is another good one. Although Kraken doesn't have the greatest interface and not a lot of leverage, I still think it's a good option and it's one of the safest exchanges out there, so just keep this in mind. So once you have opened several accounts, the very first thing that you need to do is to send only money to this account that you're ready to lose 100%. And if you're in a learning period and you don't know what the hell you're doing, this might be $100 for you, or it might be $10,000. But I definitely recommend, even for beginners, to use real money. Some exchanges offer the option to have like paper trading while you're learning, but I definitely think the best way to learn is to have real skin in the game and to be ready to lose some money, because this is where you get the most out of your experience. And trust me when I say this is the fastest way to learn your lesson. And what is your sweet spot of the money that you're ready to lose? You really have to find it, because, for example, if I'm trading like what I have on this Bitget account with about $270, if I'm trading with this amount, I know that this, for me personally, it's quite a low amount, and I'm ready to make more mistakes just because I don't care about this amount of money, and I wouldn't be making the best decisions out there. This is the wrong approach in general, and no matter if you have a $1 million portfolio or a $100 portfolio, you should follow the same principles and you should do exactly the same. However, I know for a beginner it's very difficult to have this discipline, and if you find the right spot of money that you have in your account, this will help you to build up your experience better and faster. And of course, the opposite side of the spectrum is to have a lot more money in the account than what you're feeling comfortable with. This might take some time to figure out which exactly is the best amount for you, but once you put in a few trades, I'm pretty sure you'll get a feeling. And if you start feeling uncomfortable about a position and about the size of the position, then definitely this means that you're not ready to take the step at this specific size. So just think about this and put this amount of money that you decide finally into one account and use it as your learning ground. And why I want you to put it in one account and only money that you are ready to lose, just in case you get liquidated or something goes wrong, you won't feel sorry that you have lost a lot of money or all of your money. There are some people like this that have been burnt, especially with FTX, because they had a lot of futures trading, and a lot of traders got burned because they were keeping way too many funds on the exchange that they were supposed to be keeping there. Okay, so this is the start, and I want to walk you also through something very important, especially with KuCoin, but this is also pretty much the same with Binance. You have a main account here. As you can see, I also have a trading account, which is pretty much for spot. And then I have a margin account. And here you can see I have a futures account. And some exchanges offer this margin trading, but not futures trading, which is different from futures trading. And let me just quickly show you the interface. It looks quite the same, but the mechanics and the amount of leverage that you can use there is completely different. And I think the overall experience of this margin trading platform on KuCoin is made so hard and it's so user unfriendly that you really need dedication and stubbornness to be using this type of a margin account. And the main reason, in my opinion, that they have done this in the platform is because they want you to be using the futures account. And especially when it comes to Bitget and Bybit, they have great interface for future trading, but let's just stick to KuCoin for a little bit. And here, if you go to the futures trading, you have a little bit different interface. You have a lot more leverage to play with, and it's a lot more interactive and easy to track everything that's going on. So keep this in mind. In the beginning, I started with the margin trading and I was like, why is this so hard? It shouldn't be so complicated and so hard, and the fees were quite high. So I was like, no, there should be a better way. And this is how I discovered that the main trading volume and everything happens here on the futures platform of every exchange. Okay, so this is the interface, and here on top, first of all, on every exchange, you'll be able to see hot pairs. So in this case, it's BTC, Ethereum, Matic, XRP, and so on. The usual suspects. And the really cool thing here is that you have a trading view chart where you can chart your thing and you can fine tune entries and set risk to reward and all the other beautiful things that you can be doing also on the TradingView platform. So I really like this. Here in the middle you have the order book, and here on the right is where you actually execute your trades. Here on the bottom you'll be able to see your positions, your closed positions, and so on. Let's open a position in each of the exchanges that I have here so I can walk you through the entire process. So first, you can always have a limit or a market order. Obviously here you usually have this lever or the scale to choose your leverage. And let's just start with just 3x leverage, and if we use a market order, this will show you how much of your money you want to invest. So 25%, 50%, or 100% if you want to use the entire collateral that you have in this account. And here below it will show you the amount of your positions. So in this case, with the amount of money that I have, around $800 in the account, on a 3x position, I will be playing with about $2,300 or about 0.13 Bitcoin. Of course, I would suggest using limit orders because you're paying less fees, and there are a lot of other benefits of using limit orders. I'm pretty sure if you know technical analysis and you have experience with trading, you know all of these things. And here below you can see that you have a take profit and stop loss in the case of KuCoin. Remember this because it looks a little bit different in Bitget, or the same for a short position. So once you have decided this, you can click obviously and choose your take profit and stop loss, or you can do this a little bit later, which I'm gonna show you in just a second. And it's simple as it looks. You just click buy long or sell short, and you will have a position open. So in this case, let's just use 25% of my holdings on a 3x, and if I go long, I need to put on my trading password, and if I go long, you'll be able to see that I have the position right here on the bottom. And it's actually pretty cool, the interface, because it shows you the unrealized P&L, it shows you when you entered, you know, and all the goodies that a good exchange should be showing. And here on a closed position, you can close on a market order or on a limit order. So right away you can here close your position if you like to. Also, the take profit and stop loss could be adjusted here once you have opened your positions. And we're gonna talk a lot more in detail about stop loss, but in this case, let's just put a specific target for taking profit. In this case, let's say I think that Bitcoin will get to this price, and here below it will show you what will be your actual profit. And if you put your stop loss, let's say around this level, I'm gonna see what will be my loss here potentially if I hit my stop loss. I cannot emphasize this enough. Always use a stop loss on all of your leverage trade positions. And here on top, actually, you can see your liquidation price. And in this case, it's quite further away just because we're losing just 3x margin. And now if I click confirm, and that's it, I'm gonna have my positions take profit and stop loss. Just real quick, let's do exactly the same with Bitget. And here the interface is a little bit different. And first of all, you can choose your margin type here on the top by using isolated or cross. Let's just leave it at isolated for now. And you can again use limit, market order. However, one slightly different thing is here that you're either opening a position or closing a position. So you need to be careful which one you are at. So when you want to open, just click on open. Here on the top right, you choose your leverage. So for a long position, let's just use again 3x leverage. And on a market order, again, I'm going to invest like 50% of my holdings. And a little bit different from KuCoin, here I can click this take profit and stop loss, and it will use it. It doesn't matter if I open a long or a short. So if you have the right numbers here, it will open it, and it's not different for the long and the short like it was with KuCoin. Again, in this case, we won't do this. So I'm just gonna buy long. And here you will see my position. As you can see, the interface here with Bitget, in my opinion at least, is a little bit better. You have green here for a long position on 3x. It tells you exactly how much margin you have, what's your P&L obviously, what's your liquidation price here, and what's your position size and total together with the margin. And again, you can click here on position take profit and stop loss, and we can do exactly the same. Let's use the same numbers, and again you'll see that you have 12% in profit if we hit this. And for a stop loss, let's use again this number. And here it doesn't tell you the amount, but it shows you the percentage that potentially you will be losing. So if I click confirm, and this is something I wanted to show you specifically with Bitget, and I also think Bybit has this, you have these beautiful lines that tell you visually where is your stop loss, where is your profit, and where you actually entered the position. And if I want to close partially some of the position, I can click on close, and I can say, let's say 50% of my position whenever the price reaches this level. And if I click close long, it will generate another limit order. You can see it right here. And I will be taking profit for 50% of my position. When it comes to taking profit or closing out a position, it's a little bit different when it comes to KuCoin. Here I generated another order, which is a limit order for 1/3 of my position, and it's just an order. It doesn't tell me specifically if it's going to close it or open it as a new position. So what I should do is to just sell short in the case that I want to take profit for this long position here. And if I click sell short, it will generate a limit order at that level, which will take profit basically from my existing long position. And you can see here on open orders, this is the order. And here on KuCoin, you have a specific other type for take profit and stop loss. And if we go to Bitget, you'll see that we have again the open orders right here. And here you have the one we generated, and it says that it's unexecuted. So this is the way to manage your open orders and in general to manage your open positions. Again, here you can close it right away with a flash close or with a close at a certain price level. And my advice would be to just go around, play with this, learn how the exchange works, where are all the orders, because when there's time of volatility or when you want to execute many trades, this shouldn't be an obstacle for you, and you shouldn't be thinking, oh, what will happen if I have to take profit at this level or if I have to close out my position, because just technically a lot of mistakes happen just from the execution, either from opening a long instead of a short or vice versa. You know, all of these things happen, and you need to be proficient with all of the functionalities on the exchanges that you're choosing. One more thing that I wanted to show you, nobody here talks about fees, but Bitget shows you your fees here in the fund record. So this is the last tab here. And you'll be able to see every day whenever they deduct fees from your position here. And you can see some fees that I had deducted from previous open positions. And currently on my Bitcoin, I have another one that is here on the side. And here in the fee area, you can see all the fees that they have collected. And as you can see, they might be small amounts, but they really pile up to be bigger, especially if you're trading with high leverage and if you're having your positions open for quite a while. When it comes to KuCoin, it's again a little bit different, and you need to go to your closed positions, and after you have a closed position, you can see how much they have charged you. And for example, for this long that I had here on Bitcoin, you see that I paid $7 in fees, and also let's say for the last SOL position that I had, which ended up in loss, I still paid $2.5 in fees. And when you see the P&L here and on your interface, they always usually calculate the fees. So just keep this in mind, and it will give you a good idea of, first of all, what percentage are the fees, and also overall what is the state of your position. And here you can see that I have a realized P&L of 0.35 cents, which means that this is a fee for opening the position on KuCoin. Let's talk a little bit more in detail about stop losses, and let's just use Bitget in this case. You'll see here that I have my stop loss currently at this level. Obviously, it's pretty much a random level just for the example. But first of all, whenever you're putting your stop losses, keep something in mind. If you haven't realized this already, crypto is quite volatile and it tends to clear out stops, especially if they are too tight. So in this case, on this chart, for example, if I want to open a long position here, the first level where I can put my stop loss is right below this pivot low here, which of course, when it comes to the broader range, might be a little bit too tight for a position. It really depends. This is the 1 day time frame. Just keep this in mind. And if we go down a little bit lower, let's say to the 1 hour chart, you'll be able to see that putting your stop here, let's say on this level around 16.7, it has quite a lot of chance for the position to hit your stop loss and reverse, just because just a bit lower from this level, there are also a lot more reactions. So you have to be very careful when you're putting your stop loss, and if it's too tight just because you are playing with quite a lot of leverage on a higher time frame, so let's say on the 1 day, this is definitely a recipe for disaster. So just make sure to put good stop losses. Obviously, this is not the goal of the course to teach you how to put the best stop losses. You should already know what a stop loss is and how to apply it. But from my experience, just be aware of this. And especially, I don't know if you know this, but what came out with FTX is that there was some insider trading, and the people on the exchange and the liquidity providers were playing against the exchange clients, and obviously they know where most of the stops are. So what they were doing is betting and trading against their clients. They clear out all the stops. So in this case, if you have a stop loss right here for a long position, it turns into a buy order, and after that the price reverses and might go up significantly. And just be aware of this, because I'm not really sure that FTX is the only exchange that is trading against its customers. So just be aware of this and be very careful when you're placing your stop losses. Obviously with time you'll get better, but this is just some information that I have experienced myself, and it has been very painful to see just my stop loss being hit and then price reversed right back in my face. Also, something very important about stop losses, in this case I have it at 16.9. However, if price gets here and it's quite volatile, I might not get fills exactly at this price. So potentially I could lose more money than what initially Bitget was telling me, which is from here to here around 1.6% of my leveraged position. I could have fills below this, so just be aware of this, that a stop loss doesn't guarantee you that you will exit at this price. It guarantees you that the position will be closed, but not the price that it will be executed at. And one more thing that I think we already touched on it, but if you have high leverage positions, so 50x, 60x and so on, your liquidation price will be much closer to your stop loss orders. So just keep this in mind. And again, if you're using quite high leverage, make sure it's on the proper time frame, and of course you base your trading decisions on the time frame that you're trading on. Now let's get into some good practices and some things to avoid while you're trading with leverage. What are some good practices that you should be applying when trading crypto with leverage? I'm going to share with you some of my personal experience and what I believe is very important. And the first thing that I wanted to mention is one thing that we already kind of touched upon, but make sure to trade with your accounts and with the money that you have, no matter how much is it. Like if you're having a $1 million portfolio or $10 million portfolio, whatever is a high amount of money for you. This will help you build the discipline, and I know in the beginning it will be difficult, but always ask yourself, even on a $100 position, will I be opening this position if this was a really significant number on the table, and if the amount of money that I will be risking is quite significant for me? If the answer is no, then I think you should not be taking this trade. And trust me when I say this, this will help you avoid many stupid trades just from testing perspective, because you'll be like, okay, I'm gonna put $100 here and see if it will work. This is pretty much gambling, and you need to have rules in place to make sure that you avoid this if you want to be successful in the long term, because you can have a spree of few lucky trades that are great and you are seeing your P&L going up. However, in the long term, I promise you, this won't be great for you, and this will actually create the bad habits that will be much harder to get away from when you get a little bit more experience on the markets. Also, something very typical for beginners, just because you saw that it's extremely easy to open positions, to close them, to take profit, whatever, and to use up to 100x leverage on all kinds of exchanges. Make sure that you don't get FOMO while you're trading and while you're seeing many markets move. Like for example, here on KuCoin on the top, you can see that many of the markets are moving now, and Waves is currently at 4% in the green for the day. And you might be saying, oh, maybe this is an opportunity there, I might want to trade it and so on. So no, don't do this. just focus on a few markets, for example on Bitcoin and on Ethereum, because they're a little bit less manipulated and they don't have that volatility of, for example, waves chart. Because with a lot of volatility comes a lot of opportunity. But also look at this wick here. I can just hear people screaming on this wick that it just cleared them out and it's back at support, even without having too much of a context on the chart. But just things like this are a lot less probable when it comes to trading Bitcoin and Ethereum. So just pick a couple of markets. Okay, it might be an altcoin like Matic or whatever. Just make sure it's high volume enough on the exchange that you're trading, and then look at the market. Just track it every single day and look for opportunity, chart the patterns, and just be patient and find always 100% setups that you like the risk to reward and you have a thesis why this will work in your favor. And of course, what you will be doing if it doesn't work out, and where you'll be your stop loss and the place where you're going to exit. And this also comes when you have different exchange accounts. As I said, I have around 5 leverage trading accounts. And if I open up just one position in each of them, I'll go nuts, especially if it's on a higher leverage or if it's on a day trade. This is a lot of work and a lot of stress, and you don't want to be generating a lot of stress for yourself, especially as a beginner. So although you have so many exchanges and so many accounts, just stick on one or two, and I would say even just one for a beginner, and look at a couple of markets, just Bitcoin and Ethereum, track the movements, pick up your spots, and get the experience that you will need in the long term. The next very important thing is to have a clear and precise trade plan. Not like these positions that we just opened. Let me just close them. Be patient, have a clear idea for the trade, keep track of what's going on overall on the market, because for example, if there's some kind of Fed meeting or CPI report, this might generate a lot of volatility, and usually these events are quite unpredictable, and I tend to avoid trading in these times of the month. Make sure you have a concise plan and you execute on it, which will be actually the hardest part, but I'm pretty sure that with experience you'll get better with it, and of course you'll be gaining a lot more discipline from all the losses that you will be occurring, because I guarantee you will be occurring some losses if you're trading. It's impossible not to, and even the most profitable traders are right probably around 40 to 50% of the time. So just keep this in mind. And this actually brings me to the next point, which is very important, and that is journal, journal, journal. The opportunity here when it comes to leverage trading is huge in my opinion for learning, because quite quickly you can open and close positions and you can understand what has happened in this position. And the best way to do this is to just journal. Here's an example of the questions that you need to be asking yourself before entering a trade, and also after entering a trade and managing it. When you exit, what has happened, what are the emotions that you have felt, all of these things that are extremely important when it comes to trading, and are actually the things that will make you better. If you just put in trades and put in the mouse on the computer for looking for setups, that's great. However, you need to evaluate and you need to learn from your mistakes basically, and journaling is probably the best tool I know out there for this. Also, whenever you're starting, don't just go all in YOLO into one or two trades. Make sure that you start small and increase the position size for you whenever you feel comfortable. So let's say you want to start with a 3x position on a $100 bet, which is pretty much $300 that you're investing, but the stop loss could be here, let's say at 10%, and you're pretty much risking just $30. If this is too little for you, it's completely understandable, but in the beginning, if you just put in the hours, I think it will be great to just start really small, and really quickly within few trades you will find your sweet spot for size, especially when you occur several losses. But the key question here, obviously, that will help you do this is how much you're willing to lose on any given trade, or where your stop loss will be if things go wrong monetarily and also percentage wise from your portfolio. And a journal really will help you with this one, but just ask yourself this question and with time start increasing the size if with whatever you started you think is not enough for you, or you're very comfortable with the risks that you're taking. And the last thing that I wanted to say is put safeguards in place that will protect you from taking stupid trades. One way to do this is obviously through experience. However, something happened to me which I didn't expect, to be honest, but I put on 100x trades because I was doing it on my phone while I was trying to put my son to sleep, and the market was moving and it hit my entry zone, and I was like, okay, I don't want to miss this because I don't know how long it will take for the baby to fall asleep. And I accidentally did it on my phone, which I usually avoid. I try to stay always on my trading desk and not trade, especially with leverage, on the phone. And accidentally I put 100x leverage trade, and I just saw my P&L go wild in a matter of seconds. Fortunately, I was lucky enough to close the trade in profit and on time. However, there are many other things that could go wrong, and if you have a system that you work with, and if you're familiar with the interface and so on, and have rules in place that tell you don't trade on your phone while you're doing something else, or while you're with friends, or putting a crying baby to sleep, definitely not the best time to be trading. And I'm sure I'm not going to be winning the Father of the Year award this year at least. But yeah, that's pretty much everything from the good practices. There are several things that you need to avoid when you're trading with leverage, and I want to start with a stop loss thing that I think it's very, very important. Let's say you have taken a trade, and let's just use this as an example, and you suddenly see price going up in your favor and you see yourself in profit. Right away you might think, oh great, I'm in profit, I want to lock in some gains early, or I want to move my stop loss to my entry point so I make sure that I'm not losing any money on this trade. I don't think this is a good practice for many different reasons, but mainly quite often price action will come back and retest the breakout level in this case to confirm it either as support or to break down. And if this is just a confirmation that this is a resistance turning into support, you will be stopped out of this position and potentially you will miss on the actual move and your thesis that is playing out. But because you chickened out and you don't have good risk management here, you will not be able to profit from your position. And that is really a terrible feeling. Trust me when I say it, because I've done this. And usually if you do this, this means that your entire thesis is not solid, or you're lacking the experience of execution, and is definitely something that you need to be working on. Because what you actually be doing in this case, if you move your stop loss too soon, is pretty much you're selling a support level. Yes, if support fails and if we break down below, you can close the position here after a confirmation. However, think about this. If you didn't have this position open, will you be selling a support level in general? I don't think this is a trade setup that will be very, very profitable to any trader at any point in time. So just keep this in mind. And the next thing that I wanted to say is that while I mentioned in the previous section that you should be focusing on one or two markets, this won't stop you from taking way too many trades per day. If you're day trading, you could take like 10, even 20 trades per single day, even if you just have one or two trades open at any given moment. And this could lead to over trading. So for example, you open a trade on Ethereum and then on Bitcoin, and then you get stopped out, and then you open a new position on Bitcoin. So you have two positions on Bitcoin. You know how it goes. And if you're doing this, pretty much you'll be guaranteed to be burning out in just a few days time. And of course, this won't guarantee you that taking more trades, you'll be making more money. If there's a valid setup, you should be focusing on this. If it's not, you should not have a target of making X amount of trades per day just because you'll be making X amount of money potentially. And one more thing, if you're trading with money that you need for your everyday life, this is a terrible idea because it puts another level of risk and another level of worry in your trading, which is never ever a good thing. When you're trading, you need to be very calm, you need to be relaxed, and you need to make sure that you're executing properly every step of the way. Also, since crypto is trading 24 hours, make sure that if you have a short-term trade, let's say you go down to the 5-minute chart on Bitcoin and you find some kind of a setup and you take it, don't leave it overnight, because a night is quite long, especially if you're trading the 5-minute chart. And if you're sleeping, yes, your stop loss might hit, but also many other things could happen during the night. And if you're actively managing this position while you're awake, it's a much better experience, and you have a lot better sleep if you don't have that kind of open positions. If you have a swing position, or maybe you have a hedged position on a smaller leverage and you're planning to keep it for the long term, that is fine. Of course, you can sleep with these kind of positions. But if you're trading the 1 minute or the 5 minute and you're obsessing about every single tick, definitely not a good recipe for a good night's sleep if you're keeping them overnight. Also, don't trade at all whenever you're tired or you see that your decision-making capabilities are going down, especially if you have a busy day at work, or if you had several trades in a row that are losers and you're feeling down, or you didn't sleep last night very well because you are tracking the 5-minute chart until 2 a.m. in the evening. Make sure you're trading less. There's opportunity everywhere, every single day. And trust me when I say this, you won't be missing much if you just go to bed, and or if you take a few days of a break. And actually some days even the market is not giving us the best conditions to trade. Like for example, now on Bitcoin, we're in the depths of the bear market, and here you can see that in the past several weeks it's been very choppy, and there hasn't been very clear setups, especially on the higher time frames. So just take a break. Don't push it because you haven't traded for a few days and you want to get into the market, but there are no setups, so you kind of take trades just for the sake of it, just to feel productive. Avoid this at any costs and be patient, have the discipline, and stick to your original plans. One more thing that might be overwhelming, especially for beginners, is using too many indicators. You can see here on TradingView, there are just so many indicators that you can use. There are hundreds of indicators, and also there are others that you can go and buy online and potentially give you an edge or whatever. But if you're a complete beginner, trust me on this one, if you just have your price action here, and if you're looking for breakouts and breakdowns, and you fine-tune your execution and you're able to read the market properly, you won't need that many other indicators. Yes, with time you might experiment with them, and you might find some edge with moving averages or RSI or MACD or whatever other indicator you fall in love with. But don't do this in the beginning, and don't think that having many indicators on your chart will actually give you advantage on the markets. The best advantages that traders get is usually from discipline, having good plans, and having the experience to manage the position whenever it needs managing. And final couple of points that are more on the mental side. I wanted to say that revenge trading is real. And for example, if I open here my account on KuCoin, you see that for the past few trades, I have occurred some losses, although monetary wise, they're not that big, but they're consecutive losses. And if I'm a normal trader that is just starting out and I want to make up the money that I have already lost, I'll be pretty much revenge trading. And this is definitely a recipe for disaster. If you have many losses in place right after the other, you might want to have a winning spree, and you might actually think that you're due for a winning spree. However, this is not the case. You know, markets are random and things happen on the markets with complete disregard for your feelings. So don't bring your feelings whenever you're trading, and just trade the chart and execute your plans. I've probably said this way too many times, but it's of course one of the most important things when it comes to trading in general, and also with leverage trading. And the final points that I wanted to make when it comes to things that you should be avoiding is don't get attached to unrealized P&L. So you might have taken this breakout and you stuck to your plan for now. However, you see yourself already on a 10x leverage position. Bitcoin has moved like 5%, so this means your profit is around 50% on the position, and you'll be like, great, you know, I'm moving forward, I'm making this so much money, and I'm going to buy my next Lambo here, and so on. The moment you start thinking about this is the best time to start taking profits. Even if price hasn't reached your target area, and even if you see some potential in price. I'm a great supporter of taking profits. Nobody has ever gone broke by taking profit, and also this will relieve your mental pressure, because once you start imagining yourself buying stuff with the money that you made, you have already lost part of your mental edge, and whenever you see price getting against you or going back to the initial breakout level and potentially even going lower, it will prompt you to make worse decisions. So the final piece of advice that I can give you is to never get attached to unrealized gains, and always lock some profit whenever things start getting out of control for you and you feel inside of you that there's something going wrong on the mental side. Whew, that was a huge video. I don't know how long it is, but definitely if you have watched until the end, tap yourself on the shoulder. You definitely deserve a medal, which I'm not going to give you, but I'm pretty sure you'll be able to earn for yourself if you follow all the things that we discussed in this video. If you have any questions, if you have any concerns about this or things that you didn't like and we want to discuss, make sure you post them down in the comments below. And yeah, that's pretty much everything. I'm gonna see you in the next one.